Hello and welcome to the weekend update. So we're going to talk about the S&P 500, NASDAQ. We're going to look at what the price action is telling us, what the momentum indicators are telling us. We'll look at some of the levels that we should be looking out for. We'll look at bonds, we'll look at currency, and get an idea of what could be coming ahead next week. All right, let's get started. S&P 500. This is the weekly chart of S&P 500. Now you can clearly see that at the beginning of the year we had this big rally, and then since then it's been making series of lower highs and lower lows. So the price action definitely looks weak to me, and it's different from what we saw from, let's say, January till September of this year. Now, if I bring in the moving averages just to see where the moving averages are, you'll see that S&P 500 close underneath both the weekly 20 and 50 moving averages. This sort of reminds me of the early stages of 2022, when after a rally it started moving lower. It spent some time in between the weekly 20 and 50 moving average and then closed below, and that's exactly what we are seeing. It spent some time, few weeks in between the weekly 20 and 50 EMA, and it broke to the downside. Now if it spends times underneath these two moving average, obviously this is negative. If I look at the momentum indicators, you can see RSI is now well below the 50 level. It made an attempt to reclaim the 50, got rejected. Similar to right here in the early stages of last year's bear market, it fell, made an attempt to get back above RSI 50 level, got rejected, which is very similar right here. And then if you look at MACD right here, which is beginning to move lower, similar to the early stages of 2022. Now it still remains above the zero line. You'll see here it came up to the zero line, paused for a little while, and then broke to the downside. So there's quite a bit of similarities between what's happening right now to the early stages of the bear market of 2022. Now I'm not suggesting that we're going to have a 2022 bear market part 2 right now, but at least the price action doesn't look healthy to me. The momentum indicators don't look healthy to me. If I look at the daily chart just to see, you can clearly see the sequence of lower highs here, 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 and then right here. And you can see that on Friday it closed underneath the daily 200-day moving average, obviously underneath the daily 20 and 50 EMAs. So, there's no question that the price action momentum indicators, both on a daily basis as well as weekly basis, is now negative. Now, let's quickly have a monthly look just to see, what the monthly looks like. Overall, on a monthly basis, I would still say that it's okay. You can see that the price is still above the monthly 20 and 50 EMAs. The price is just above the monthly 20 EMA. The monthly 20 EMA is around 41.86 at the moment. Also notice that having completed two negative red candles, we're working on a third red candle at the moment. Now the month is not over yet, but notice that 3 red candles in a row, monthly red candles, is rare. You can see 2 red right here followed by a green. You can see right here 2 red followed by a green. You can see 2 red followed by a green. You can see right here 2 red followed by a green. Let's see, you can see right here 2 red followed by a green. Now we still have over a week of trading left. This can turn out to be green, but just pointing out that 3 consecutive red monthly candle is rare. Even if you look at these, there's 3 red right here. I mean, it happens, but it's kind of rare. It happened right here during the 2007, 2008. But generally, it's kind of rare. So we'll see what happens. But coming back to the monthly, price action is still above the monthly moving averages. RSI is still above 50. MACD remains. So on a monthly basis, I would say that it still looks fine to me. Maybe this is just a pullback to these moving averages. And maybe RSI is pulling back to this RSI 50 level. So monthly looks fine to me. Given that, let's talk about some levels. I think it's very important to understand. So here are some of the levels I'm watching. So I'm just going to zoom it out so you can see the levels. So we are right here. This is the previous lows right here. From an S&P 500, this level is 42.16. I'm not sure that this is going to hold. I think since it's come down, I think 4200. This is 4200. Maybe it wants to touch 4200 and then maybe bounce. So this is one of the level I'm watching, 4200. The other one I'm looking at is this one, which is around 4160. Remember I said the monthly 20 EMA is around 4185. So we might undercut it. So I'm not ruling out this or the monthly 20 EMA, one of those two. I think it is entirely possible. That said, I think market has fallen quite a bit. It was as high as 4,400 on Tuesday and then almost close to 4,200 by Friday. So we could see some kind of a bounce and maybe another leg down. If we have a bounce, I think these moving averages are going to cause a bit of a problem. So these moving averages are going to act as a resistance, because you can see right here the 50 EMA, it wasn't able to take out the 50 EMA. The 20 EMA right now is around 43.26. So let's say between 4300 and 4320 might be the place where there could be some resistance. So let's say if it comes up to here and then another leg down, something like this, only because I'm basically saying that rebound to release some of the oversold condition, but market may continue, just go straight down there and then make a move. But I think 4200 is an important level. So if it comes to 4200, maybe some rebound to release some of the oversold condition and then maybe another leg down. Because the daily and the weekly is quite negative, I'm not favoring a big move to the upside. Now that being said, we've got big earnings next week. We've got Microsoft, we've got Google reporting on Tuesday, and then we've got Meta on Wednesday, and then we have Amazon on Thursday. So it's possible those earnings could change market sentiment, but it's also possible that market doesn't like those earnings and then falls in a big way. So we need to be very careful next week, because the mood is negative. And when the mood is negative, sometimes market ignores good news. And other time, and if there's any bad news on top of a negative sentiment, we could get a big drop. So I think it's best to be, cautious, at least for the time being. So I'm not favoring. On the upside, this has been a problem zone. You can see lots of rejection. If you look at the weekly chart, you'll see that on a weekly basis, 4,400 has been a rejection zone. So 4,400 on the upside. If it takes out that level, then we might say, okay, fine, maybe things are beginning to change. So that would be on the upside, but on the downside, I said watch 4,200, 4160 on the downside. Now the equivalent numbers for SPY would be this number, which is 418. So obviously we've got these levels, which is 420, and then 418, and then finally 414. Those would be the levels I'm watching. I mean, obviously, it can go lower, but let's take one thing at a time, and then we'll take it from there. Now let's look at Nasdaq and Nasdaq 100 and see what's going on in Nasdaq. So this is Nasdaq. I mean, Nasdaq is holding up relatively better than S&P 500, but it's still weak. You can clearly see that lower highs coming through. The moving average prices below the moving average. Momentum indicators are all negative on a daily basis. If you look at it on a weekly basis, you'll notice that for the first time, Nasdaq 100 closed underneath the weekly 20 EMA. It had held off this weekly 20 EMA for some time, but it did close underneath that level. Now RSI is yet to close underneath the 50, so this is still okay. But given what the price action looks like, I'm not sure that this is going to hold. But we'll see. Next week we have earnings. If market decides to react positively, then maybe Nasdaq holds these levels. But it's beginning to now look weak. It's underneath the weekly 20, but still remains above the weekly 50. But momentum indicators are, you can see, beginning to move lower. If RSI on a weekly basis closes underneath the 50, and that would be negative, which means that all of the major averages would be in a negative, displaying negative momentum on a weekly basis. Okay, let's look at some of the levels on S&P, on Nasdaq and QQQ. So in terms of the levels, so I'll just bring in the levels and just get rid of the moving average so we can see. The first level I'm watching is this level right here, which is for Nasdaq 100, it's around 14,432. That's last month's low. You can see there was a buyer stepped in at this level. So this would be the level I'm watching. If it goes underneath that, that means for the month of October, we will now be underneath September's monthly low. So that is significant. If we go underneath that level, next level I'm watching is this one, 14,125. Now obviously there'll be another level in between these two, so that'll be roughly 14,250-ish, but all the way up to 14,124. So that's the level I'm watching. What is one possibility is that early next week we pull back, retest, maybe undercut a little bit, and then we make some sort of an attempt of a rebound just to release some of the oversold condition, and then we do something like this. So I'm not sure that if we move here and then we go straight up, it's possible that we could have another leg down, but after some kind of a rebound, because some of the some of the indicators, momentum indicators, are quite oversold on an hourly basis. So usually you see some kind of a rebound, but those would be the levels I'm watching. Obviously resistance would be 15,000. This is a key level. 15,000. If I show you the weekly chart, then you will see why. You can see that it has been struggling to close a weekly close above 15,000 ever since it fell below this level in mid-September. It has failed to close above the 15,000 level. So a weekly close above 15,000 would start to show some sort of a strength. So that's on the upside, and those are the downside levels. Okay, let's look at QQQ. What are those levels? So the first level is last month's low, which is 351, and underneath that is this level right here, which is around 344, 345. And finally, we don't want to rule out this level, which is around 337. If there is any bounce, this is a big problem area. 366 is a big problem area. If I show you the weekly chart, you'll see that it has struggled to close above 366 on a weekly basis since falling below that level in September. You can see rejection this week, rejection the week before, the prior week before that. You can see that rejection. So 366 on a weekly basis is an important level. Let's look at some of the other markets. Let's have a look at the bond market just to see what's happening there. So you're looking at the 10-year bond yield, which closed at 4.991% on Friday. It was down slightly. The high was 5%. You can see that the 10-year, the long end of the yield curve, the 10 and the 30, they've been going up a lot, and they've been going up very quickly. You can see the sharp rally. So the high was 5% on the 10-year, and on the 30-year, the high was 511, which is right here. What I wanted to show you is the spread. This is the spread between 2-year and 30-year. The spread was as wide as 107 basis points. On Friday, it got uninverted completely. In fact, the 30-year is now above the 2-year. 30-year was below the 2-year by almost 1 full%, but it closed above the 2-year. 30-year closed at 5.08% and the 2-year at 5.07. In fact, if you look at the spread between the 2 and 10, this is the 2 and 10, the spread is now only 16 basis points. It was over 100 basis points as early as July. So you can see that the long end of the yield curve has gone up so quickly that it has now almost entirely uninverted. The 2 and 30 is, but the 2 and 10 year not yet. It's only off by 15 basis point. I won't be surprised if this gets uninverted completely. There are a couple of ways it can happen. You can see that the 2-year has pulled back. It traded as high as 525. It has been pulling back. It closed at 507, and then the long end, the 10-year has been going up, and it's been pulled back, from 5%. So let's say the 2-year comes back down a little bit, and the 10-year goes up a little bit, and it would be, uninverted. They're close to each other right now. And this is basically what's causing the problem in the stock market, the sharp rise in the bond yields. Rising bond yields basically means that the interest rate in the market are now high. If you look at the mortgage rates, they're close to 8%. Interest rate on credit card, interest rates on car loans, any kind of loans is now higher than what it used to be a few months back, 6 months ago. So the financial conditions in the economy are tight right now. As a result, consumers may not have that much money left for discretionary spending. So where do we think yields would be? Well, I think, this is how I think about it. Fed funds rate is at 5.5%. If the Federal Reserve doesn't increase Fed funds rate further, I think there are indication, many of the Fed speakers are saying that we may be done here. So assuming that they don't increase Fed funds rate, I'm not sure that the 2-year, 10-year, 30-year, they trade above the Fed funds rate. I think they're going to be slightly under the Fed funds rate. So I think 525 probably is the most I would expect, possibly even lower. So I wouldn't be surprised, let's say, if the 10-year trades somewhere between, say, 510, 515 on the high end, and 480, 475, it can just bounce around between those two range. So I don't think the bond yields, at least the 10-year, is going to go that much higher from 5%. 515 tops, 520, I don't know. But do I expect it to fall? No. At this point, there's no indication. Maybe it can trade within a range between 515 on the upside and 475, 480 on the downside in that. And the 2 years can do the same thing. The 30-year, it's at 511. Maybe it can go up to 520 and then pull back towards 5%. So I expect the yields to be range bound. Before they were trending up, having made the move, I think going forward, the 2, the 10, and the 30, they're kind of going to hover around 5%. Maybe 10, 15 basis point above 5%, and maybe slightly 2-year. I don't expect 2 years to fall to do I expect 2 year to fall to around 480, which is well, maybe it could. 480 is around here. It could, because so sorry, I'm looking at the this is 2 year. Where is 480? 480 would have I don't know. They goes underneath this level. It can, if there's weakness, it can. But I think the yields are going to be generally hovering around 5%. All of them. So I think going forward, we should see more settled yields. And that should calm the stock market. I mean, the stock market doesn't like when yields shoot up, especially on the long end. And I think that's basically one of the problem. So moving on to VIX, I think we need to be careful. What VIX is gradually moving higher. It's telling us that that maybe there is a risk in the market. Because if you look at it's reminiscent of what's happening, what happened in during the bear market when we saw VIX moving higher. VIX closed over 20 for the first time in a while. It struggled to close above 20 for some time, but it closed and it's been moving higher. Even if you look on a weekly basis, it's gradually moving higher. Look at the RSI on a weekly basis. It spent all of this year underneath the 50 RSI 50. It's been moving higher. So that's telling me that VIX can go go up higher. And that basically means that there could be increased volatility in the market, and maybe there's more downside to come. The first level I'm watching is this one, 23 and a half. And beyond there, we have to start considering 27, 28. But let's see what happens around 23 and a half. So VIX is telling us that be cautious on the market. Oil. Oil. I'm surprised that there hasn't been a big move to oil. It has rebounded from the recent lows. It's struggling to get through this level, which is around 89. If it gets through this level, then we have to consider this previous high, which is around 95. The other one is the gold. I mean, gold is just going through the roof. You can see the gold was down here, 1815. This was the last time I highlighted gold, and since then it's been moving up. I'm looking at this level, which is 2000 on gold. It's just going through the roof. So I'd be careful, but there's nothing suggesting that it's going to come down. So if there is further move to the upside, 2000 would be the next level I'm looking at. Dollar is basically kind of moving sideways, still quite elevated because the bond yields have gone up quite a bit. So I think the dollar could be just basically going sideways if the bond yields settle down and trade in a range. So I think dollar could also move sideways for a while. I mean, I wouldn't expect a significant move to the upside, or I wouldn't expect a significant move to the downside, as long as bond yields are kind of hovering around or trading in a range as I suggested. So I would say the dollar could be moving sideways going forward. All right, I'll leave it at that. Thank you very much for watching the video.